funny part of this is, I mean, I've done a couple videos on Snapchat, and people are still surprised by this, and it kind of makes you laugh. I never thought this was a company I would want to invest in, and I didn't. I felt like it's one of the most useless apps on the planet, and that's just my own personal opinion. And the way they structured it from the get go, it's all, I think, I don't know 100% off the top of my head. I'm kind of pulling from memory. When this thing went public, I think the stock structure was set up so the people who, as buying the shares, you almost have no voting rights at all or no power. You get these, like, the way these tech companies now structure stuff, they can just kind of do whatever they want and tell you to screw off as a shareholder. At least that's how I remember it when they went public. And I'm like, I just don't know if I like what this company's about at the end of the day. And when you talk to people, they'll say, well, if they don't, Wall Street only cares about cash flow. Cash flow, they're going to base everything on cash flow. I'm like, that's fine until it's not, right? It's, I look at a company and say, is it really investable in the long term? And I know you can ride waves and make money on short term investments. There was money to be made on Snapchat. But it's one of those things like, I always ask myself, are we talking about Snapchat in 5 years from now? And I'm not sure we are. Because where's the value in it, right? If you talk to people, it's like, what do you think of people on Snapchat? What do you think of the value of Snapchat? And most people say, well, it's a place to send dirty pictures. It's a place for people who are cheating to send messages and dirty pictures. Like, this is the rep of what a lot of people think of Snapchat, for example. And then you're looking at TikTok booming. You got people are still on Facebook and Instagram. Like, where does Snapchat really fall in there other than, sending photos and whatnot and kind of doing stuff on the down low? Is that a long-term investable company where you want to dump a bunch of money? And then as advertisers, as someone that owns multiple businesses, as someone that also owns a digital agency that, does advertising and creative, like, we know on that business that when the economy starts to go south, the least productive advertising areas get pulled first. And often that's social media. And I think you're watching right now as things slow down. The first place these big companies are thinking is, what are we getting? What's the ROI on the Snapchat advertising? And I got to imagine that's also going to come to Twitter. And you'll see that trickle down to, Facebook and Instagram and everywhere else. But the places where you feel you get the least amount of ROI go first. And I have to think, unless you're selling like, DNA test / who the father test is on Snapchat, like, where is that what place you want to spend a lot of money if you're a big name brand? And you're watching them get hammered right now. Hell, on Twitter, if the bot thing's true, I have to ask myself, man, if I spent all that money on ads and like 25% of those people were fake, I want some of my money back. And then that's going to adjust Twitter's revenue, right? So I just feel like there's a lot of pain coming to social media, and the things that are needed are going to stick around, and the other ones are going to fade out. Who knows? Something else is going to take over. But I've just never been a fan of Snap, and I don't really know many people on Snapchat. They're alive for the moment, but I think what happened is, for a lot of companies, the COVID period and that the influx of money and shopping and online being stuck at home gave a lot of companies a lifeline that if you looked at where their stock was and what their performance was before that, it wasn't in a good place or it was downtrending, and everyone got lifted up. And that's the same thing for every booming economy. That restaurant by your house that kind of sucks, that you can't understand, that's in business, stayed in business through 2020 and 2021, up to 2022, because there was this excess amount of money. Now, granted, some businesses did fail. A lot of businesses failed in the restaurant industry for other reasons during COVID. People eating out or didn't have a good carry-out model. But bad companies stay alive during good times, and then during bad times, they tend to get flushed out. I think you were starting to see some of the tech companies get flushed out before COVID, But everything just got uplifted with all the money. Trillions of dollars are pumped into the system. We spent a tremendous amount of time online, and everything got kind of puffed up. Well, now you're seeing that bubble pop. Facebook took a hit. I mean, whatever. You got the Elon pain train going on over there. Whatever the hell's going on with Twitter, they're down to 30 something bucks. Snap's getting hit. I want to say I saw that TikTok got a tremendous amount of money shaved off their valuation. Everything was just puffed up. Housing prices, everything was just, every asset class, every company, everything was just kind of puffed up in the last 2 years, and now it's coming back down to earth. But there were some companies that were just getting flushed out and about to go down the drain, maybe. I'm not saying Snap was one of them. There's other companies, from local companies to public companies, that just weren't doing good, and the last 2 years have been a lifeline. Well, that party's ending, and you're starting to see these earnings take a hit. You're starting to see subscriber growth shrink. Look, Netflix took a big hit too, right? Their stock was down to 190, 200. People are running around surprised right now, and it's like we lost our minds for the last 24 months. Do you not remember what it was like at the end of 2019? People's opinions on certain things and technologies, where the market was going, you got to go back to that mind frame, because that's where we're at now. And now you're watching some of these results. We're just going right back to where we were. Regression to the mean at the end of the day. But it's going to go back to that trend line and probably below. So, you start seeing Snap. I don't even know what it's at right now. $12? Isn't that where it was at? Hell, let me grab my phone real quick. See if I can pull up a stock chart. I think back when I was looking at this 2019 or so, wasn't it down quite a bit? People were wondering, was this thing even were they going to turn a profit? Were they ever going to make it? Oh, shit. So right now they're down to $9.96. Jesus, it's worse than I thought it was. So look, I go back to, 2019, into 2019, this thing was at 13, 14, 15 bucks. And then it took the big hit during the COVID shutdown. It dipped down to 11 or 12. And then, like everything else on the planet, ran up. I mean, was this really a $74 stock? Think about this for a minute. Before COVID hit, we were at like 14. This thing was as low as $6 in January 2019. Right before COVID, around 20 bucks in January, February. But then it goes up to $74. What part of a rational market do we need to understand? The stock that was questionable, and we wondered what kind of earnings this company was going to put up, and subscriber growth, and were they ever going to make long-term profits, goes from $20 to $74. And then we think we're not in a bubble? Are they just putting pure crack in our water supply? Maybe it's fentanyl these days, right? It seems like fentanyl's everywhere. Are you just putting this stuff in the water and making everyone a bit loony? When you saw people lining up 40, 50, 60 people deep for houses that aren't that really desirable, did you think that wasn't a bubble? If you look at, is Snapchat not the ultimate sign that we were in a bubble? From $20 to almost $80. And then you got to ask yourself, for what? Yet, when this thing came out, the news is everywhere. You're shocked. You're not shocked. You've been living in a bubble for 24 months. And we're going back to where we were in 2019. Hell, before this is all over, we might go back to 2015, 2016 numbers on the S&P, Dow, and all that stuff. We don't know. They keep saying the market's factored everything in. I don't think so. If the market's factoring in a pretty good recession, they're only factored in this much so far, in my opinion, because they keep talking about how strong jobs are. I have several companies that does nothing but work in the employment industry. I'm well aware on how fast those strong job numbers fall apart. Because you realize everything unravels fast. Nothing is that strong. If we took away the job numbers, I think you drop another 5,000 points off the Dow. Now we're starting to get a little more realistic, because you're looking at very sticky inflation, that this thing's not going down to 2.5%, 3% anytime soon. if they do get it under control, what's under control? 6.5%, 7%? That's still terrible, right? Slowing economy, possibly popping a real estate bubble that's going to crush people financially. Then I'm already seeing layoffs at one of the companies I do that works at companies that does layoffs. Our layoff numbers are through the roof the last 45 days, and it's just getting started. Layoffs hit, housing market's slowing, mortgages are like everything's slowing. This virus is reemerging. Hell, we got a monkeypox outbreak. If now that the WHO says it's a world emergency, health emergency, there's a lot of turmoil going on right now. And you're saying that this is where about a 20% correction is that's Wall Street factoring in the recession? I don't think so. What you saw was we were due for a 20% correction because we're just kind of coming off that multi-trillion-dollar high of all that money getting pumped in the system. As that money dries up, the market's going to fall. So we were due for a pullback. But that's not because of the macroeconomic conditions. You also, three things you got going on. Coming down off of peaks because of the money that artificially pumped up every asset class from cryptos to housing to equities. So we had to come down off of that high because if you stop pumping money in the system, eventually things come down. Then you had the individual companies, such as Netflix losing subscribers or XYZ company not making as much money as they were supposed to. So you had, coming off the bubble, you had the individual companies with their problem. There's still this macro thing going on that is the layoffs, the GDP contraction, like the overall conditions of the economy. We've not reached that third step yet. We have corrected because of the bubble, because of the money supply to an extent. We started to correct on some of these companies that, for example, Peloton. Everyone stayed home and bought Peloton. That's the best market they'll ever see in their life. A complete shutdown where people weren't going to gyms and they had to work out from their house. They will never have a better market again unless the same thing happens again or worse. That is the best Peloton we'll ever see. You can't sustain those numbers forever because now people are going back to gyms and they don't want their Peloton equipment. So we had to adjust for these overinflated numbers. For example, some restaurants were booming during COVID. They did carryout and you couldn't eat in a restaurant. Those carryout places were killing it. McDonald's, I think, found a way to make more money without having their dining rooms open. Well, now we're getting back to normal and things are going to chill out for certain companies. So we did step one, step two, but the big one, step three, the overall economy. What's going to happen with inflation? The housing market slowing down, the layoffs hitting, all this stuff. So I think right now the Dow's at 3130. Yeah, that's not Wall Street factoring everything in. That's them trying to be cautious. But we've not seen what the layoffs are going to look like, how bad inflation's going to be, how bad the slowdown's going to be. We're going to see. But again, we're running around and we can't believe that Snapchat took a beating like this. If we're that delusional that we're surprised that, Snapchat can go from $74 to $9.96, if you're that surprised, you got a lot more surprises coming. So what's your opinion? Where are we at July of next year, July 2023? Where do you think we're at and why? Drop a comment below.